The reality is there is a fair amount of stimulus, but for our banks, the fundamentals are still quite challenged. We have a property bubble that's gradually coming off. The RBA is trying to help things. They are talking positive. They're not mentioning anything negative. So is the government. And there is a reason why the government is throwing so much stimulus at the property market, because that's basically on the last leg. RBA is out of rate cuts. So there is a big risk for the banks. I think once the JobKeeper and Job Seeker bonuses come off in the next couple of months, that will really challenge the numbers. So the banks will get into a bit of trouble there. But I think it's a matter of valuation. It got down really cheap, and then it bounced back and is now bounced about 15%. So at this point, the valuation looks quite stretched.
But to play devil's advocate a little bit, we are seeing them basically correlating to what we're seeing in the US financial side. So any kind of positivity coming from there is obviously going to impact the banks here. But in terms of the government stimulus or even the economic recovery here in Australia, it's a lot less bad than what was expected. And if the wage stimulus measures were to be extended for targeted areas, a lot of extra funding coming through from the government in other areas that are going to be addressed perhaps in July at the mini budget, is there any kind of upside scenario over the next 6 months you can see for the banks?
I think over the 1 to 2 year time frame, the banks will do well. I'm not saying it's going to shoot the lights out on the rebound, but I think it'll do better than most of them are, I suppose, the boring side of it, the defensive side of things. But in reality, it's a currency trade. So, in the short term, the dominant buyer and seller of the banks are the global investors. So you have to look at what's happening in the Aussie dollar. That's pretty much tells you where the banks are headed. So we've had a 1 cent bounce in the Aussie dollar overnight, and the banks are shooting the lights out. Now, I think overall, iron ore is the main person who's holding up the Aussie dollar. If iron ore rolls back, the Aussie dollar will roll. And if the Aussie dollar comes off, the banks will get hammered again. So would I be a buyer of banks here? Probably not. I'd expect that to come off, and I'd be buying it cheaper because I think over the next 3 to 6 months, the banks have got a tough play. But if you're looking at it over 12 to 18 months time frame, I think the banks should do okay. I mean, they're basically a protected species in Australia. They can do just about anything and get away with it. So in context, it's a 4-pillar protection scheme. So they should do better. But, it's not the one that's going to shoot the lights out.